Dear investors, in today's video, I would like to introduce you a very interesting company, Taiwan Semiconductor Manufacturing Company. The company's history, it's established in 1987 and headquartered in Taiwan, and pioneered the pure play foundry business model by focusing solely on manufacturing customer products. So this company only produces semiconductors. So by choosing not to design, manufacture or market any semiconductor products under its own name, the company ensures that it never competes directly with its customer. So customer is very happy because they don't need to build up manufacturing capacity. And this company, this Taiwan Semiconductor Manufacturing Company, produces the products or the semiconductors for them, and they won't compete with Apple and Nvidia and other big names or any other customer. Okay, how did I find this company? In the last video, I showed you the quantitative method I use in FinViz. So I would like to first filter some companies based on some conditions. Now I selected above 10% of return on equity and above 10% on return on asset. And on top of that, the price per earning per gross should be under 2. And I wanted to see only mega market capitalized companies. Interestingly, I found Facebook, Intel, and Taiwan Semiconductor Manufacturing Company. Yeah, Intel plays in the same field as Taiwan Semiconductor, but in this video, I will focus on this Taiwanese company. Revenue bar technology. You can see the 7 nanometer technology is 35%. Next to that is a 16 nanometer, and third is 28 nanometer technology, and all others, the rest of the technologies. Okay, the industries by platform, you see, smartphone is the biggest, HPC, IoT, automotive, DC, and others. Statement of comprehensive income. Gross margin excellent, operating margin excellent, and net profit also great. So nothing to complain about the income statement of the company. Return of equity more than 28%. Very nice numbers. Cash flow, you can see also the operating cash flow. Almost all of the operating cash flow is spent on capex. And every year, the company is heavily investing in new technologies because this company wants to be on top of the market, wants to be a market leader. And in order to do this in this technology advanced field, they must invest heavily in technology. You see the free cash flow at the Q1 2020, it's very low. So almost invest everything to grow and to capture good margin new businesses. I also checked on the homepage the executives bio, and I was impressed the education background of all of the executives and listened some talks, and I believe these are great persons with great knowledge. You can also check at the homepage. Okay, some analysis from Morningstar. It's written, the rise of fabless semiconductors has created attractive growth prospect for foundry segment, which has in turn encouraged increased competition. Of course, margins are great and competitions is coming to this segment. However, the majority of these newer competitors are relegated to the trailing edge of chip manufacturing due to the prohibitive cost and engineering know-how associated with the leading edge. So it's very difficult to enter this segment because the cost advantages of big manufacturers, and it's 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 manufacturing, but it's not a simple manufacturing. You need deep knowledge in the engineering field. By leveraging its size to focus on advanced and of foundry spectrum, TS can combat price erosion normally associated with other products. Okay. Switching costs has came to fruition in recent years as TCM and Samsung are at a comparable level of process technology, and Apple, Qualcomm, Nvidia have historically used both foundries. Yep, TSMC competes with Samsung. This is a main competitor. Also, Samsung is huge and has the capital to invest heavily in this industry. And the analyst says we believe Taiwan's narrow economic moats stems from superior cost advantage that only a handful of other manufacturers can boost. Fabless semiconductor customers demand fabrication technologies capable of producing cutting-edge chips that are faster and more power efficient and lower per unit cost. So two advantages, the cost and the knowledge. And maybe they say narrow economic mode because the company has to invest every year to keep up with the technology. They want to be in the market leading position. So they if they don't invest, these big companies like Apple, Qualcomm, Xilinx, AMD, Nvidia, they will choose other manufacturing companies. But as long as they can invest and be ahead of the game, they can gain great margins on manufacturing. So its mode is narrow mode, and I kind of agree with this narrow mode analysis. But I think it's better because to achieve this size and technology advantage, you need a lot of money, and maybe some people have a lot of money, but you have to get this great brains also to the business, great knowledge to this business. Okay, foundry market share. As you see, TSMC is the market leader with 50%. This is huge. And Samsung is the second one. And there are other players, smaller players. Okay, the technology roadmap, you can see the next now it's 7 nanometer, but it's already I think I don't know whether it's already able to produce 5 nanometer, but TSMC is the closest company who can reach 5 nanometer. Okay, Samsung is pouring a lot of money toward beating TSMC in the race to 5 nanometer and beyond. So it's you can expect big competition from Samsung, but the Korean giant sees a rare opportunity to shine in areas where its rivals are too busy to make a dent, such as making 5G modems for Qualcomm and smartphone makers such as Vivo, or AI chips for bio self-driving fleets of cars and buses. So you see in the picture, it's building huge manufacturing capacity by Samsung. So maybe the market share of Samsung will increase. Not maybe if, they will take the market share from the smaller players. Okay, some valuation from the company. You can see the company is traded at Taiwan Stock Exchange and also at New York Stock Exchange with TSM symbol. Based on my analysis, the normal PE of the company is around 20, and in case the company can remain competitive in Israel, can remain ahead of the game, you can expect a nice double-digit growth from the company, and the stock price might reach around 70 US dollar by 2020. Okay, and still the last page. So I believe this might be a good investment opportunity. I will keep a close look at the company. I will follow the company, and if the price maybe drops a little bit, I consider to invest in this company. This is a very interesting field, and not so many. You cannot find companies like TSMC. This is with great cost advantage and great knowledge in the highly competitive semiconductor field. Yeah, Samsung might compete with this company in this manufacturing segment, but I believe there is enough space in this semiconductor field, and this field will grow, and the company has a nice future. So please consider this company and do your due diligence if you are interested to invest in this company. I hope you enjoyed my video, and I wish you a great day. Thank you very much.